Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? I don't have the music ready. You know what? Anyways, today, FOMC day, huge day. Market is pricing in like 4 to 5 cuts next year. And this is I've never seen anything like this, because like when I go and I read all of the kind of like primers for this is what we're expecting at the meeting and all of this, basically everybody is expecting the Federal Reserve to push back against the market pricing. So I was reading one report that was saying, they'll probably do 50 basis points of cuts. If they say 75, if they say only 25 basis points cuts, that's hawkish. If they say 75, that's a little bit more dovish, but they're definitely not going to do 100 basis points of cuts like the market is pricing. And it's just like, how can all of the analysts and everything be saying this and the market pricing being off? Well, I think that the reason why you get in the activity that you are is because the CTAs have gone long and they don't really care what the pricing is. So we could get something today. Well, let's go into the charts and we'll talk about that a little bit. Okay, so yesterday, CPI just absolutely destroyed the treasuries, but the auction ended up being okay, and we've mostly recovered the downside movement in CPI. Isn't that odd? And then over here in the S&P 500, well, they loved that. You can see pretty solid up move that day, and we're above 4,700. So I mean, like, look at that. That's pretty clear. In fact, we got to come out to the daily chart now to see that, like, hey, we're poised to make a jump to all-time highs, perhaps early next year. If it keeps at it. Oil, on the other hand, continues to languish. This drop in oil has been something else. Here we got gold and silver. So gold and silver still kind of, well, they're right at 2,000, but they still seem to think that, the market, these seem to be agreeing that the market pricing for interest rates is not right. There's silver. Copper, it just kind of been doing its own thing here, but down in the overnight session. And we get into the Japanese yen, largely following the treasuries, a little bit lower today, and the dollar trying to claw back that 104. So, and Bitcoin, we will look at Bitcoin too. Bitcoin, after taking a big hit 2 days ago, just kind of going sideways for now over there. So that's basically where we're at. And I do believe that we have we have PPI here in about 30 seconds. And you can see the liquidity has completely pulled. This one could be interesting. Core PPI month over month, they're expecting spot 2. So we'll see what we get here in a moment. Okay, that was a pretty decent jump. And core PPI month over month was 0 versus spot 2. Ooh. Are we going to end up above yesterday's CPI? That's going to be crazy. My, oh my. So PPI year over year, spot 9 versus expected 1. Core PPI year over year, 2 versus expected 2.2. And then the headline PPI month over month 0 versus the expected 0. And the core PPI 0 versus an expected spot 2. So for producers, we are seeing the disinflationary movement that we want. That is really good. I still don't think, I kind of feel that if the Federal Reserve reduced interest rates 100 basis points, that would make things easy, money easy again. I don't see that happening unless we really get real economic weakness come through. Come over here and look at the volume profile. We're just a little bit higher than we were. We're just a little bit higher than we were for the CPI. Here's what I think is going to happen. I think that the Federal Reserve is going to come out and Jerome Powell is going to be like the most hawkish you've ever seen. Not the most hawkish you've ever seen. Maybe the most hawkish he's ever been in a press conference. They're going to push back against this market pricing. The dot plot is not going to be anywhere close to. In fact, I think a lot of people in the dot plot will say no interest rate changes next year at all. Okay, it's all going to be on the hawkish side, and the Treasury market will completely ignore it. Like there will be the temporary move, people hearing that and selling it, and then it will come back and we'll end Friday like about where we are. That's what I think is going to happen. I think that the reason that the treasuries are so high, the reason that the market pricing is where it is because of CTA strategies going long the treasury with the momentum flip. And those guys do not listen to what the Federal Reserve says and change their positions. It's completely mechanical. And so unless there is a large enough decline in the treasuries to flip the momentum back short, they are going to stay in, especially with the options expiration that we got Friday. So I think that the market will kind of stick here a little bit, and then maybe starting next week, we slowly start to move back in line with where we probably should be. I'm going to type that in Discord. That's kind of what I suspect will happen. I hope I'm wrong because I have some puts on TLT. I have some puts on TLT that look like they're going to expire worthless on Friday. But I hope that the Federal Reserve injects some reality into this market. But I don't know. The way things have been going kind of looks like it's not going to happen that way. Well, after that PPI, I don't know if I have a trade. I do suppose I could try going long. Oh, they really bought up the 5-year. So they steepened again. There's clear steepening in the curve here. Of course, after news that flips around a lot, so I don't know if I can rely on that particular dynamic in the yield curve continuing through. But looking at me for like a trade that I can take, yeah, we had a big spike there off of PPI. It's come back. Does that mean that I can try and buy the dip down here somewhere on anticipation that it will continue to move up? Well, the kind of read that I'm getting from the order flow right now is like all of the robots and everything are reacting to the initial news, but it doesn't really look to me from the flow that we're getting that the larger traders are really trading the PPI. I think that they're all kind of just saving their bags for what the Federal Reserve does today. I would also add that, if everybody expects the Federal Reserve to come out aggressively against the current market pricing, why am I not seeing these signs of, people trying to go short into it? I suppose maybe we will see it later. But that's the kind of thing that makes me say, well, okay, PPI was good. FOMC likely to be bad. What does that give me flow-wise, right? That's conflicting flows. So I don't think that I have a trade. If PPI was higher than expected, then I think I could probably try and catch something on the downside, but it didn't turn out that way. On my morning walk to McDonald's, do you walk to McDonald's every day, Autolycus? When I say licus, it kind of sounds like sickly. So it almost surely is pronounced Autolycus, because that's more cool sounding. Well, there's a little bit of push back up. It's only good for like 5 ticks over here in the micros, though. Let's come over here. Check. Traders fully priced in 100 basis points of Bank of England rate cuts after UK GDP plunges in October. So another thing that could happen. Oh, let's see here. GWE says federal funds rate previous 5.5, forecast 5.5. I bet actual is going to be fucking. No. They're not going to change interest rates this time, right? It's going to be so. For the Federal Reserve meeting, first thing that you're going to get is, of course, whether it's a cut or a hike or a hold, and it's going to be a hold. Almost there's basically 0.01% chance that they will cut or raise interest rates. Okay, but then the next thing that people are going to focus on is going to be the dot plot. They're going to see, has the Federal Reserve adjusted their expectations for the dot plot? If the market was to put a dot plot on there right now, they would be saying that we would have 4 cuts, 100 basis points of cuts by the end of 2024. Okay. Probably the median FOMC forecast is probably going to be more like 50 or 25 basis points of cuts. Okay. So the market's going to be looking at that. Now, this is the thing that's so funny about this, is that you're going to come in and you're just going to say, okay, median forecast is 50 basis points of cuts, right? And the market may actually read that as a positive, because that's like we expect the FOMC forecast to be 50 basis points of cuts. So even though it's still 50 basis points different from what the market is currently expecting, it's actually not what the market is pricing. It's not what the market is expecting. And so you could see like a rally off of that, right? Like entirely possible. I'm just warning you guys. This is going to be a weird FOMC meeting. I have never seen a situation anywhere even remotely close to this. I am really not sure how they're going to react to it. Like, the naive approach here, I think, would be the Federal Reserve is going to push back against this market pricing, and the Treasury market in particular is just going to get absolutely decimated today. But if it was that simple, would the Treasuries be hanging on here right now? I don't think they would be. So it's got to be more complicated than that. Holy cuss. Okay. Wouldn't that be auto lie, like L-I-E, lie us, instead of L-I-C, like us, instead of lick us. It's one of those situations where you would have to have like the, you know, the expanded character sets that they put in the dictionary for how you pronounce things, right? Barth, good morning. That's a new name. How are you doing? Welcome to the show. You know, I didn't say hi to everybody, Jewy, Dom, Tactical Density. See, Tactical Density was late the other day. You didn't miss it today. Good job. Ismael, I haven't seen you in a while. How are you doing? Wait, what was your name before you changed it? I can't remember. Mation's there. Mation changed his name to add a bunch of stuff afterwards. It's a Greek mythological thief with a metamorphosis ability. Oh, really? Oh, okay. Well, now you shouldn't have told me that. Now I'm not going to trust him. Okay, so they jumped pretty hard on that PPI. We're basically back to unchanged. There was a temporary boost that was like, okay, maybe that was the dip and they're going to go back up, but then they've fallen down since. So let's reset things. I suppose, so I guess if we start to get some, well, actually we are starting to get. So I'm a little concerned. Let's say that I went short here. I think that there could be another little bounce, but in the 10-year at least, I am starting to get a little bit of signs of a meta order short. So I'm gonna keep an eye on this here. Will not let myself get too distracted. Okay, so that bid at 23, after they ticked up, came along pretty easily. Note that the 30-year didn't come along with it, so that's probably more of the steepening. All of a sudden, my trap is starting to. I'm starting to feel it in my traps. I don't know what the deal is, but I will get like the 2-day delayed onset muscle soreness so easily. Worked out on Monday. Now it's Wednesday. I can, you know, I worked my biceps. I can feel it in my biceps are really sore, and my gosh. And it will, even if I'm like regularly working out, this one I had just coming off of a week or two break because it was the end of the cycle, and trying to work out a little bit harder than I had been the past few weeks. Oh man, they came back down so fast. They saw me look over here for just like 1 second and are like, okay, sell it. Interesting. Well, there was 1,000 lot at 21.5, but then these other ones, like, look, they were not a whole lot. And I'm not really seeing it in the dollar so much, but I am definitely seeing it in the Japanese yen. And definitely about a 10,000 contract short. So that's definitely like, you know, and this is like 419. So 4.2 has kind of been a spot lately. So you need to take, oh, I do actually. I take magnesium. Yes. Well, the main, if you want to look it up, the main multivitamin supplement that I take is called Orange Triad. And you're supposed to take 3 to 6 of these a day. You spread them out so that your body can absorb it. So it definitely helps me sleep. Definitely helps me sleep. And if I don't take that multivitamin, I don't think that I'm getting the full benefit of the multivitamin. But if I go like a month not taking it, I start to feel awful. So, and I eat some things that I'm like actively trying to increase magnesium in particular. So I try to have really leafy dark green salads regularly. I've got, oh, I forget what they call it. It's like the wheat germ, you know, like when they're making flour, one of the things that they'll do is they'll kind of like sift the wheat, and like the stuff will like fly off of it as you're doing that, right? And that stuff, you know, has a lot of minerals and vitamins and stuff in it, and they can turn that into another product. And you can get that, and that's really good on stuff like ice cream and stuff. So I eat that. And that has a lot of zinc and magnesium in it. My understanding. If you don't plan to have more kids, why not go with testosterone steroids? I don't think that I need any kind of steroidal support. Because first of all, it would, you know, I do competitions from time to time, and that would be illegal and dishonest. And second of all, because most of those compounds are illegal. Nope, not interested. Okay, they came back. They came back, but no volume. Of course, they kind of fell on very little volume. I am seeing the meta order short, but it, you know, it fell a lot faster than the selling that I'm seeing in the cumulative delta. So I think that a little bit of back and forth here makes some sense. I am seeing a little bit of buying in the 5-year. That also makes me worry. So I think if I was to take a trade here, I think I might be able to, okay, yeah, there you go. So, I think that I'm stumbling all over myself. I don't want to be like, I'm suggesting a trade to you. No. But my own thinking here is that this may actually be a good opportunity to go short as it's pulling back. But it kind of looks like the yield curve is steepening. So the yield curve steepening may continue to create a little bit of up movement in the treasuries, positioning ourselves here and reducing adverse excursion a little bit tricky. There also could, you know, some people may interpret what just happened there as it finding support. And there, we may actually see some buying come in here. In fact, we may actually see, you know, we had 10K sell. We might see 10K buying through here. It's actually, yeah, it's already getting to the point where it's kind of like, are we getting trapped sellers here? I think that I should hold off. So I'm going to take a trade. I gave in and watched some of those real estate cash machines with 25% down videos. Those are rad. NQ seems conflicted. Yeah, well, the S&P 500 did rally on it, but I'm not seeing anything too significant there. They did buy, though. I mean, if I was forced to take a trade, I would definitely be buying in the ES. But I think that if I was forced to take a trade, that it would be a very, very short-term trade. All right. You know, I think it's so funny. If you want to know what the gig was that was the most successful and doesn't really work anymore, just go and look at what people are talking about on YouTube. Because by the time it gets onto YouTube, by the time the strategies, we call them, because they're not necessarily trading strategies, but like business strategies, by the time that they get to YouTube, that usually means that like the edge of it has already been lost. And it's not because like, oh, that's why they're making this YouTube video, is because it doesn't work for them anymore, and so now they're trying to make the money off of teaching it to other people. I think that it's just kind of like that's how the timeline tends to go. Is about the time that people have been successful enough with it and have figured out how to make money teaching it to other people on YouTube, that's the point where the market has already become saturated. And like, when the market becomes saturated, that's when YouTube starts sending it out to everybody, because there's so many people that have the interest in it, and that's why you start to see it, right? So as an example, I think that institutions, by and large, already understand a lot of the things about market microstructure that we talk about on this channel. So I don't know if those things give you like a hard edge. I think that they definitely help you. And I do think that they give you an edge over other retail traders, right? If the day comes where the term market microstructure and market inelasticity becomes a trending term on YouTube, then it probably wouldn't be an edge over other retail traders either. You get what I mean? Now, of course, it would still be good information to know if you're going to trade, right? It'd still be kind of like base, and it would still be extremely useful to guiding how you want to develop your own strategy in terms of, looking for what is predictive of flows and all of that sort of stuff. That whole framework is always going to be useful because the market is just fundamentally, like at its core level, informationally inefficient. And that will always provide opportunities for you, right? But yeah, it could become a term and become popular, sort of a thing. And that is definitely what happened with the real estate market. Was honestly from like 20, well, probably even earlier than that, but there was a period there where getting in the real estate was like the way to do it, man. I made money from real estate. I did. Like I've said this many times before, but it bears repeating. I have made more money than I could ever possibly lose through day trading, just from understanding the interest rates and timing my housing purchases correctly, and the hundreds of thousands of dollars that I saved on my real estate transactions. So I made money off of it too. Frankly, if I had not gotten married, I probably would have continued. I was basically renting 2 rooms in my house out, and I was saving up loads of money. If I had not gotten married, I probably would have just bought more real estate, and I could have been one of those people that like made tons of money being a renter and then kind of got everything screwed up during COVID, right? Totally. That was the way to make money, but it's not anymore. Now that it's popular on YouTube, there was like this short period at the beginning of COVID, and then after that, 2021 came along, and then all of a sudden it didn't work anymore. There's too many people buying into it. Does the edge ever go? Sometimes it could, but I think that really you want to focus on, new stuff. You want to try and find stuff that nobody else knows, right? And part of what I'm trying to teach you is all of the base requisite information that you need to kind of know what, like in order to find new edge, it kind of helps to know what the market already knows, right? So what I'm doing is I'm trying to get you to break even. I'm trying to get you to the same level that the market at large is, because the average retail trader is not there. And then I'm trying to teach you and give you the tools that you need to be able to do the research on your own and discover new things, right? And that's where I would focus. But I have found in backtesting, like I will backtest a strategy, and like that'll be a strategy that for whatever reason at that time seems to be working really well in that market. And then it stops working, right? So I just kind of forget about it, right? And then sometimes I'll be doing my backtesting and I'll be like, well, okay, I need something that does this or this. What have I done in the past that maybe would have gotten me that? And I go back and look for strategies and I'll see them and then I'll go and I'll backtest them again and say, okay, maybe it's working again. And it never does. It never comes back. I've never had an instance where it was like a strategy was really successful, stopped working, and then it started being successful again several years later. Never had that happen. It's like once the market figures it out and it stops working, it never works again. If it's a fundamental edge, it does come back. If it's more of a pattern technical edge, not usually, they start getting front run. Yeah, so something that I would think about when developing an edge or when if you think you have an edge and you're studying and trying to learn how to trade that edge effectively, something that I would always think about is what is the source of that edge? So the majority of technical analysis, what they teach is that the reason that these chart patterns work is because human nature is very predictable and consistent over time, okay? It's false. People are actually incredibly random and adjust to changing conditions extremely easily. That's what humans are so good at. So if you see a pattern out there and you think that this pattern is purely caused by like market psychology, by people, then that is extremely likely to disappear and change. And then, yeah, like never come back, frankly. But on the other hand, there are patterns, things like, let's say statistical aberrations in the market that you can see that are created simply by the rules of the game. And this is what market microstructure is all about, is asking based on, how a limit order book actually works and the rules at the exchange and everything, are there certain statistical kind of things that will happen because of the rules of the game, right? Those are going to be extremely consistent, okay? Especially if it has to do with the order book. Those are where your market making robots will always be there to make money. You might not be able to make money because you'll have to beat other people to the punch, but there will always be somebody out there making money off of that microstructural edge. That will always be there, right? Now, what Akshay is saying is, if it's a fundamental edge, so I don't know if he necessarily meant this, but if, for instance, I have a certain pattern, and I think that pattern is working because we're in a low interest rate money printing environment, then, like that was what was happening a few years ago. If we had a recession and things kind of turned out in a way that led to another easy monetary policy period or macroeconomic background again, I would expect those strategies to start working well again. So as an example, If we ever go back to outright QE, like they're calling it QE7 or whatever it would be now at this point, I would be coming into the commodities here and looking for which commodity has a little bit of a spike, a little bit of momentum at the beginning of the session, and then just trying to swing trade it and hold on for the whole day, and just do that every day. Back in 2010, was it? I guess I would say more like 2011, 2012. That was the trade, and it worked so amazingly, right? And if we ever got that macroeconomic, I would be just going full bore on that, for instance, right? It's kind of hard because right now, given the current macroeconomic background, it's not entirely clear to me what the best strategy is. Can you explain why the treasuries are sensitive to 6J movements? So the largest holder of treasuries is Japan. And when you add together the Bank of Japan and then all of the pension funds and other kinds of funds that are in Japan, like a pension fund does not work if you are buying Bank of Japan notes. Okay, they've been like on negative interest rates for a long time now, so that's not sustainable. So in order for those funds to even work, they have to come over and buy treasuries, and that's why, because the Japan is the largest source of treasury demand. The 6J and the treasury notes are extremely well correlated because rising interest rates is going to change the demand for them to come over in here and stuff. It's kind of weird because they are very closely correlated, but it's incredibly interesting when there is a news move and they diverge. Those are the most interesting. I don't think that I've ever had a case where like I predicted that was going to happen and made money off of it. I think those are the most interesting moves, is when they diverge. Now, part of it also is that, the market knows at this point that there's a strong correlation, and so there's all of these robots now out there trading off of that correlation, and that just makes correlation even stronger. By fundamental, I meant money printing equals assets go up, nominally cause more cash to chase the same amount of assets. Technical equals more like, yet full moon is out, so Apple will cause both are while nominally is the keyword in that. Yeah. Prince Trader is late again today. 30 minutes. You missed the big piece of news. Now, is there any opportunity left? I don't know. So, let's come back and analyze this again. Let's analyze. So here's the 10-year. You can see big buy, and they sold it. Sorry, my pen's over here. They sold it down. Now, since that time, the volume has pretty much been flat. But the treasuries have pulled back. Very interesting. But I think it's kind of what we were saying, right? Because where was the volume actually? It was over here in the 5-year. So they bought the 5-year really, really hard. They didn't buy the 2 and the 30s quite so much. And what did the spread do? That's the 530 spread. 530 spread steepened. So it was just like I said, when we were down in here, I'm like, oh, I think that we could go short, but because of the spread, I'm concerned about the possibility of us rising back up, because it does look like they're steepening. So now that it's steepened, is this a better spot for us to try and go long rates? Well, I don't know about that. Because they may just be that the spread trade is like the only real flow out there, and that there's not going to be any more real serious flows until the Federal Reserve meeting. And do you want to hold it until after the Federal Reserve meeting? Opportunity will come around 7 Chicago time. Why is that? Oh, around 11 Chicago time. That's it. I don't know what that would be. Yeah, I don't know where I got 7 from. That would be 10 o'clock my time. But there's no news at 10 o'clock. You watched yesterday's live? I mean, that's why we originally started the channel, so you guys go and watch the replays and you're finding them useful. I'm glad. Yeah, I'm kind of really do feel like I want to take a trade, but I kind of feel like I'm trying to force it. I don't know if I really have a really good signal on, like I do have something that, so first of all, if I try and combine all of my flows together, right? First we have PPI. I would say that the PPI has largely been a buy, but very, very brief. So that flow may already be over. And then we've got the Federal Reserve meeting. And I think that the Federal Reserve meeting should be a net sell, or at least that going into it, people will probably be selling on anticipation of them pushing back. But they might not trade that until later in the day, if at all. They might just sit on their hands, and then, you know, when Federal Reserve meeting happens, and we move, right? So I've got two flows, they conflict, and I'm not sure that I would be seeing those flows at this specific time. So I don't really have anything, but that does kind of give me a framework where, like, if I start to see a big meta order in the flow, I might be able to pin it on one of those two things and feel more confident about taking a trade, right? But I'm not really getting that either, am I? I did get a little bit of sell, but now we moved up anyways, and it's actually more in the spread. So I think from all perspectives, I don't necessarily have a trade, but I still kind of want to go short it. I think that's me trying to force something, right? Let's see here. So let's read what's been going on in Discord, because we've been having a conversation with Alligator, and he is really smart. The Fed hasn't sent any warning it could move faster than planned. If they don't change their stance, the market could be disappointed, but this scenario seems widely anticipated to me. In spite of this downside risk, the market can't stop climbing. Not sure to understand correctly how participants are positioned at the moment and what's pushing the market these last days. You can look at CTA positions in hedge funds and cash on hand by banks. I know. Overall, my best guess is still long-term investors locking high rates, plus mid-term investors playing an easing cycle. If correct, long end should outperform, but current levels don't really support it at the moment. I think he's right. Yeah. 11 isn't when London is closed. So London usually closes at 9:30 my time, unless we're still in the bizarre zone where there's the daylight savings time difference. But I think that we're past that. In fact, I think that London starts daylight savings time before us. So pretty sure that the London market closes 2.5 hours from now. But there might be other sets, you know, so I don't see news. That's why I like, actually makes me very curious why actually it says that. Perhaps there is another class of participant that tends to do things around that time that, you know, we'd be interested in. Crude oil inventory is at 9:30 Central Time. That will be interesting, though. That will definitely be interesting. I mean, the funny thing was last week, like the oil report last week, remember, it was another big draw, and the market completely ignored it and sold anyways. So, like, one of the things I am starting to wonder is the market actually just pricing a recession? I mean, I think that that's a possibility that we haven't considered enough. None of the economists really think that we're going to go into a recession, but you know, I'm starting to see people say the Eurozone is going into a recession. So if the Eurozone is going into a recession, China's still not going too well. How does the United States avoid that? It seems to me that the only thing propping things up right now is the amount of money that's coming out of the government right now. And that if it wasn't for that, that we probably would have already seen a recession. And this goes back to this whole discussion about, it seems like the numbers say that the economy is doing very well, but people don't feel very optimistic about the economy. And there's a couple of different measures by which we might say, how do people feel about the economy? But I think that the one that economists are going to be primarily concerned with and talking about are going to be things like consumer expectations, consumer sentiment. Well, a lot of consumer expectations and consumer sentiment are based on people's expectations of the future. So you just had a period where 2021, or let's say 2022 rather, really sucked for most people. 2023 has kind of been recovery, and now we're kind of expecting 2024 to be weak again. So in that kind of situation, how can you expect people to actually be optimistic about the economy, right? Because they all kind of know that any kind of success, that brief success that they're having right now is temporary, and that we're going into another soft patch, right? And then at that point, doesn't that almost become a self-fulfilling prophecy where, you know, we're already expecting some market weakness because of interest rates and so forth, and that you combine that with momentum and everybody feeling kind of down about the economy anyways, that it does create a recession? And then for, you know, 100 basis points worth of cuts would actually make sense, right? So the market could just be saying, you know, this is the way it's going to go, not because of what the Federal Reserve thinks, but because that's, you know, what the economy is going to do. They did come down another tick. I suppose 16, half 16 is as good a spot as any if I'm really going to do something. But I'm still kind of stuck in, no. Like, I'm seeing the turn. I really want to do it. I do kind of feel in my gut that we'll probably turn back down, but I don't think I actually have, based on my framework and the way that I want to trade, I don't think that I actually have a trade. How does USA avoid recession? Many different reasons, but energy independence, robust economy, no socialism, reshoring. Yeah, energy independence is a critical factor there, right? Why don't you trade in Forex currencies or gold? Well, I think that Forex is a crock. I want to say it like it's a scam, but I don't think that Forex is really a very fair game. So remember, if we're coming in here and we take a trade and we make money, it's basically because we predicted future orders, right? We bought it, and then other people behind us bought even more, and that moved prices up, and that's how we were able to make money, right? So there's all sorts of things that we can use about what the economy is doing and all of the stuff that we've been talking about today that could potentially predict those future orders. Well, how do you do that for a currency? The problem with the currency is that the factors that are going to predict the movement in currencies are very often things that we do not have access to. If you were a government insider, then you might know a lot of things that are going on that could potentially affect the currency movements. And of course, currencies are affected by macroeconomic news as well, but it's a little hard to trade those. So basically, our ability to predict flow in currencies is hampered. And then on top of that, we can't even actually see the flows in the currencies, right? You can trade Forex with your broker, but that's just, they give you a bid and an offer, and that's it. You can't see the book. You can't tell what the volume is or anything like that. So I don't really feel that Forex is really a very fair game for a retail trader. And there used to be the Forex world in the United States. The largest Forex broker got kicked out. So Forex is not really a big thing in the United States anymore. I mean, you can still do it, but it's just like because FCXM, I think is what they were called, right? Is gone. There's not nearly as many people doing that. Now you could trade it in the FX futures on the CME, sure. But so yeah, it's the same with cryptocurrencies, right? Trying to predict what Bitcoin is going to do on a day-to-day basis is a fool's errand, because it's a bunch of rich doofuses in Asia deciding to buy or sell it that day. And how do you know that they're going to do that? You don't. Unless you're one of their buddies, you don't know what's going to go on. So this doesn't make sense to trade it. So I think as a retail trader, your best bets are going to be like treasuries because of the economic sensitivity, followed by pure commodities like oil, gold, copper, wheat. Well, I would go to corn before wheat. Corn, those sorts of things on the CME are probably your best bets in terms of like really short-term trading. Okay. If you want to go higher time frame, then maybe it makes sense to do other things like stocks, and I guess you could swing E-minis. Never met anyone who made money on Forex and could have a sensible conversation with me that did not include order block everything. I mean, most of what you see in the Forex world is chart analysis, because like that's all you've got, right? You just go with what you have, even if it's not super effective. My understanding is that if you work for a bank, that the Forex desks are the most difficult ones to work on. Okay, so a few ticks down, we are turning back down. I am seeing pretty strong volume in both the 30 and the 10, pushing it. This still appears to be a part of a steepening trade. The 5-year, the 5-year did lead the way. You can see the 5-year is down more than the others, but I'm not seeing very strong volume sell in the 5-year. In fact, I think what I see here is like the 5 and the 30 kind of pushed it and dragged the 5. And then the 5 swung a little bit further because of that. Make money on foreign exchange, run DX against the 6 constituents. So you're doing arbitrage trading between the dollar index and everything else. Okay. I'm still trying to decide, I'm still trying to talk myself out of going long rates here at 417. There was a point where I could have gotten 416 or 4165, but those are past. One of the things the thing I'm having a hard time with here is that I think the risk of it going higher here is much more limited now that we kind of came up and are kind of doing this slow pause and turn back down. What do you mean why you open a lot of DOM? Somebody, XAU, that's come up before. Is that a gold stock? Okay, you say that it is gold dollar. Now, one of the things is that I could take it on sim. Oh, it's a CFD. So this is one of those things that keeps coming up is like, so people have been commenting on my price action video. They're like, well, yeah, but these people are trading CFDs and stuff. Well, first of all, if the CFD dealer is doing what they're supposed to, which is just turning around and selling it on the market, then all of these people doing CFDs will still have an impact. But are there really that many people doing CFDs? Like, I really don't think that there is. I think that most people that are getting in, retail traders that are getting into trading and doing this, I think that the number of people doing it in futures far outweighs the number of people doing it on CFDs. You can really only do CFDs in the UK, and pretty much everybody discourages it. Like. CFDs are illegal in the US, and my primary trading is on CME, so I stay away from those, even if my country of residence. So yeah, exactly, actually. I think the majority of retail, well, can we really... we'd have to quantify it, right? Yeah, like how many retail traders are there outside of the US compared to inside of the US and all, Doesn't make a whole lot of sense to me. Especially since, like, all of these things that you could trade on CFDs, there are other ways to do that are, like, way less sketchy, right? Like, you could just trade gold stocks. You can do options on gold. And like the number of like opportunities to do these things are like getting more and more every day, right? Like now we have daily options. There are people that are scalping daily options, right? Is there opportunity in that? Apparently there was. I think that it was a little bit brief. Maybe now it's become oversaturated, but apparently there's a lot of volume doing 0-day to expiration options. What's the next crazy thing going to be? I don't know. I hope that next time around that I see it and get a piece of it. That was kind of interesting. We are starting to see up here more iceberging. I'll underline that for us for a little bit. We can keep an eye on it. But we came down, bounced back up one price, and then there was some iceberging there on the bid. They fell through it, but it was there. Oh, that's right. I have something today. Let's see here. When does that start? I think it starts later, but I'm in here. Hopefully it didn't already start. Oops. Daily options is such a wackadoodle scam. I'm not going to call it a scam, but really don't think it's something that I oh, you know what, I'm thinking about next week. But when it's next week, it is 7 o'clock. Okay, it's a Monday. My 2020 was ruined from 0 day to expiration Tesla and SPX. I mean, I think part of the reason why it's popular among retail traders is because you can come into some fairly cheap options. You know, like just as an example, here in TLT, right? They've got these options that are only like 20 cents right now. You know, if you really expect the Federal Reserve to just slam the market down and bring us back to the levels that we were at last week in the treasuries, you could buy TLT options for 20 cents. You pick the right the right strike price and everything. Maybe you make, $1 or $2 off of it, or you sell it at $1 or $2, right? So you could literally like 5x your money right there, right? Is that actually going to happen? I don't know. Maybe if you sit there and say what they're pricing in compared to what I think the market is going to move is not right, and then you trade it, right? But daily options are great. They're just stocks with downside protection. Mm-hmm. Every single one of these is a different market. You can see where they kind of split, right? Yes. ZB, ZN, ZF. What's the volume on daily options? Oh, I could tell you off the top of my head. I remember seeing some posts on Zero Hedge and so forth talking about like how much money was going into options. Now the issue is that when you look at options, the vast majority of options expire worthless. Okay, and that effect is even stronger in 0 day to expiration options. So. But there were some people that apparently like made big swings at the beginning there. Like it did get popular for a reason. Help people with it, yeah, all the time. Now, I mean, what I prefer to do is you're writing something and you get stuck and you just ask me a question, right? I have written things for people before. But I try and limit that. So the reason that I don't like to develop things for other people for pay is because if I'm developing a strategy for you, right, you're gonna want to change it. It's a process. It's an iterative process, and I'm doing that for you. That's an ongoing thing. So unless you want to pay me $1,000 a month, it doesn't really make sense. It's better for you to learn to do it on your own, and I just, give you tips when you get stuck. So there's 417 again. The issue is you need to be right on the time element. I find it very crazy that you would want to add another element to your trading when the current is already hard to handle. You can send me, well, so Discord is probably the easiest way, or you can send me an email to speculatorseth@protonmail.com. But usually, like, when people are having programming issues, they either message me or they put something in the programming channel on Discord. That's curious. So there was a little flurry of activity there at 25, but they didn't actually break. Think of someone who's coming in with the intent to day trade, to open and close this position during the same session. How are 0 day to expirations any different? Rather, they are just cheaper leverage. That's bonus. Yeah, exactly. I think that's exactly what it is that it's the easiest leverage. I think it's kind of messed up, in my opinion, because the whole thing is that they set these numbers on how much margin you can use on stocks, because part of what happened in like the 1920s when we had, or in 1907 rather, was that these traders were trading largely on margin, and then they took too big of a loss, and that too many of those people happened, and there was a problem, right? So then they came in and set these limits so that couldn't happen. And ever since then, it's almost all of the evolutions in the market that I've seen have been, how can we get around that? Oh, I can't really trade large margin with stocks, but I can with options. So I'm just going to do options. And so it's like the cheaper the minimum, like the one contract, the cheaper the minimum is, more retail traders can trade it. And then how much leverage do you get with that small amount, right? So here's a question for you, Akshay. What if there were hourly expirations? Do you think that if there was hourly expirations, that people would move over to the hourly expirations? Or do you think that would be taking it too far? You know? I think the thing that would be weird about hourly expirations is, like, if it expires at the top of the hour and there's a news event at the top of the hour, like, does the news event actually come out like a few seconds after the expiration? So if you actually wanted to make an outright bet on an hourly option, you wouldn't want to do the one that expires right when the news comes out. You would have to do the one for the next hour. And then it would be like, oh, the hour happens, and then, like, the first 5 minutes of that hour, then that's like the maximum, and then the rest of it is just time decay or something. You know, I don't know how that would work. Hourly would create settlement problems. Actual settlement happens after hours, so if they can figure a way around that, then they will be great. Pure gamma, no other. Great. Okay, so how would you... So are you saying that if it was an hourly expiration, then the best game would be find something where there's going to be a big move, larger than the market is pricing, and if it goes, the gamma you'll really win big because of the gamma? Or would there be another way to do it? Market makers would have a nightmare. Yeah. That is one way. I kind of feel like yeah. Even better would be to buy the stock and sell at them when he calls, because they will be inherently expensive. But wouldn't you have to do it like, so that would be difficult, because it would have to be like, okay, you sit there with your offer on the calls, somebody hits you, and then you would want to take the position in the stock so that, you know, it was truly at the money or whatever, right? Because if it was stock that you had bought a week ago and it was at a completely different price from what it is now, I don't know if that would. Well, I mean, I guess you're still making some on the stock and stuff, but geez, I don't know about that one. I guess it would also kind of depend on the instrument, right? Because a lot of zero day to expiration stuff has been going on in the SPY, and that was very different from like the individual stocks. What are some good books on my YouTube channel? I have a really great videos. You haven't watched my order flow video series and read the strategy document that you can get from speculatorseth.com/strategy.html and start there. I want to open the same chart. Well, so if you want to open the same chart, you can go to Trading View and open up ZN. So we can go to Trading View, Products, Super Charts, and then we can do ZN, and it's a future. So I could also go to this tab for futures, right? 10-year note futures, and then you want the front month. So ZN1 exclamation point. Now you get what this is, this DOM right here. ZN. Of course, CV exploded when I get out. I mean, I'm still tempted to go short this, but I'm really glad that I've sat on my hands, right? Because it has not been cooperating. They kind of came down there and sat on it for a little while, and now they're moving back up. Yeah, if you do it on Trading View, you get it 10 minutes delayed. To get it live, you have to be paying a data provider. But the point that I think they were trying to make to you is that like just looking at the chart doesn't really help you. I think that some people might say, well, if I combine all of these things that other people on YouTube are talking about certain chart patterns and quote unquote price action, and then I combine it with the order flow, that maybe I'll get something that's very, very powerful. But it doesn't really work like that. This kind of comes back to this thing that, you know, we always seem to be coming back to this when it comes into this technical analysis discussion, is that like they say, okay, well, yeah, head and shoulders pattern doesn't work. This moving average doesn't work. This X, Y, and Z thing, they don't work. But maybe if I combine all 5 of those things together, then that will work. And my question is, if none of those things show any edge individually, what makes you think that combining them together will show an edge, right? You're just data snooping at that point, right? You don't have some unified theory about why these things together are actually like, show me something unique about the market, right? If they have no edge individually, they probably don't have any edge together either. I watch people and they use the DOM tape, yeah, because what they're doing is they're cheating. What they do is, maybe we should do this. What they do is they'll come in and they'll take trades, right? They'll go short, and then if it even goes a little bit in their favor, they take the profit. And then if it doesn't, if it goes against them, they'll let it go way far against them. So like they'll win 80% of the time, and then there will be one day where they just get stopped out every time. And everybody forgets about that day. Maybe you're not watching that day. The audience doesn't notice. That's how they do that. It's just taking risks. There's not actually any edge in it. Well, the tape does have an edge to it. Sorry, the DOM, let's say. We could call it the tape, but the DOM, there is some edge in the DOM. It's very difficult to make money from the DOM alone as a retail trader. You combine that with informational inefficiencies, things that you know about the market, things that you know that can predict future orders. Then you combine that also with good risk management, correlated instruments, volatility, knowledge of volatility. Now you have something very powerful, right? Because what we're doing is, we're combining things together, but we're combining 5 things that we know and are proven to have edge, right? So we know there are people out there that make money just trading volatility, right? We know that there are people that make money out there just trading statistical arbitrage, correlated instruments. We know that there are people that make money just trading off of the DOM, although it's and a lot of these people, these 3 categories that they're making money, they're making it on very short time frames, and we can't trade those edges because we're not fast enough, right? And then we're adding on top of that our risk management. You have to have risk. I mean, that's just like a required part of it. And then our informational inefficiencies, and this is kind of the crowning part that we can do that a lot of other participants in the markets can't, because what they're doing is mechanical, or they're a robot, or whatever the deal is, right? When you combine all that together, you get something powerful. But each one of those things has an edge. You turn around and you're incorporating something that there's absolutely no evidence out there that there's any edge in it whatsoever, then why incorporate it? That doesn't make sense. Is this a neutral extreme day? Well, it is kind of looking like the flows have kind of died down, and that they might just sit here until the Federal Reserve meeting. Yeah, but I don't think you heard what I said, so let me try and express this better. So what I can do here on the chart is the ZN will have this tendency to trade in these little ranges. You see this? We'll get a liquidity hole. So basically, you can identify these places where we start to get range bound. And then you say, oh, okay, I can take 1 tick out here. Okay. And maybe I think that we're more likely to move down than we are to move up. Okay. So you come in and you say, I'm going to go short here, and I'm going to take 1 tick profit. But what if it doesn't do that? What if this happens right here? You don't want that to stop you out. So what you do is you have a stop that's like really far out here that are like never going to touch. And then on top of that, you can do things like, if this does happen, I can just double down. I can just double down in the hopes that it'll come back down. And if it does come back down, it doesn't have to come back down as much in order for me to like break even right here or something like that, right? So what am I actually doing? Is there actually edge in this? No, what you're doing is you're taking on risk. You are taking on 2 to 6 ticks of risk to make 1 tick. Okay. So what are the probabilities of that working out for you? Well, there are formulas for this. Okay. So the way that we do this is, I have to come back over here now. Okay. So the way that you can kind of derive this is you can say my profit is equal to my average winner times my win rate P minus my average loser times 1 minus P, right? Because my win rate plus my loss rate will equal 1, right? And then you can also include commissions, but we won't include commissions in here, okay? So if you do all of this math and everything and you kind of like consolidate terms and stuff, basically what you get down to is it's 1 over 1 plus W over L. This is called your R factor, okay? So if your R factor is 1 to 1, then your P will be, so 1 over 1 plus 1 equals 50%. Da, 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 da. If we take 2 to 1 risk, right, we want our winners to be twice our losers, then you get 1 over 1 plus 2, which is equal to 33%. Right? That's 3 to 1. You get 1 over 1 plus 3. And you get 25%. Okay? But what if we actually, our loss is twice what our winner is? Then what we actually get is we get 1 over 1 plus 0.5. Or 1 over 1.5. Which could be the same as 1 over 3 over 2, which is the same as timesing this is 2 over 3. And now all of a sudden, your win rate is 66%. Ah. See? So what happens? By taking on risk, you will win most of the time. But note that these numbers that I'm giving you here are for break even. Basically, I'm saying in order for you to make money, you have to win more than 66% to make money. See? But if you're on YouTube, you don't necessarily have to worry about that. All you care about is that your audience thinks that you're winning most of the time. And when you lose, which happens rarely, that they just forget about it. So if you go and you look at these people on YouTube that are talking about smart money concepts and all that kind of nonsense, what you will find is most days that they come in and they're scalping or whatever the deal is, seems like they make money. And then maybe once a year, twice a year, they'll blow the account and start over again. And the people that are watching on that day, they'll know. But a lot of people just discount it. They say, oh, well, he was having a bad day. He made these mistakes. It's not a problem with the strategy. It was a problem with him. So they still believe in it. Right? Or they didn't watch him that day, so they don't know. Or even more likely, they're a new viewer. Right? If this only happens 3 times a month and your average viewers are only around for a month and you're getting like thousands of new viewers in every month, right? My audience is the same 24 guys every day. It's very consistent. They remember every time that I screw up, right? I don't know why people don't use net drawdown to calculate expectancy. Yeah, that's exactly what they do. Dude, so one of the ways that people game this stuff is that there have been these websites that are like, you develop a strategy and then you can sell the strategy on the website, right? And so you go to the website and the top performing strategies will always be these strategies that like win 99% of the time. Like literally they'll win 99% of the time. And why is that? It's because like they refuse to ever take a loss. And when they do eventually take a loss, because eventually you get enough volatility that they're forced out, and then they blow the account. So, and here's the thing that I've been kind of getting at is like, okay, so if you want to know how well you're doing, you want to take an equal risk reward. That way, how often you're winning is a much more accurate reflection of how effective your decision making is, or how effective your edge is, because my risk reward is about even. For me, I try and catch winners. So my winners are a little bit larger than my losers, but that still keeps me around a 40 to 50% win rate. And so if I'm not doing well, if I'm making bad decisions, I can see that very, very quickly. Whereas if you're doing this risk-taking strategy, you could be absolutely trading terrible, and there could be absolutely no edge in what you're doing at all. But just because of the taking on risk part, you're still likely to win. And you build this huge ego, you think that it works. When the reality is the only edge that you actually have is taking on the risk. That's like the kind of the crazy thing is that you could, if you say, okay, here's this pattern, and this pattern works, and the reason that I know this pattern works is because there's this guy on YouTube and he was making money with it. But if the source of his profits was actually the risk taking, then it doesn't tell you anything about his pattern. Right? I'd like to send you my full-time statistics for you to show. Sure. I'll make my exclusive course and sell it on TikTok. There you go. Yeah, there's a strategy in FX called Surefire. It works as long as you can remain solvent, and they sell it as a strategy used by banks because they sustain the solvency by, quote, printing. Well, but there is something to that, right? Is that what you do is first you want to have an edge. A real statistical, provable edge. For the bank, it's probably being at the front of the queue and being fast and having statistical arbitrage or something like that, right? So I'm going to take a trade where, you know, I put my bid and offer in there based on a relationship with the Japanese yen. And if, you know, this is too low and somebody hits it into me, then I'll take the fill. And sometimes you get a situation where somebody knows something and they just push it against them. And then that strategy is going to take a loss. Right? And those losses are going to be bigger than what you make on average. But because the wad of money that they are trading with is so large relative to taking a big loss, it doesn't matter. They make money in the end. So what are they actually doing? They're combining a real edge with the risk taking. Now, every once in a while, this doesn't work out, and that's how you get LTSM or these kinds of guys where, you know, they took on too much risk. The fat tail was like way, way bigger than they realized, and then they go kaput. But for banks, usually that doesn't happen. Okay. But the problem is that people can make money short term purely by taking on risk. And they use that to fool people into believing all of their nonsense bullshit. That's why you can't just watch somebody. You can't just say, oh, this person made money this year. That means that I'm going to make money too from trading this. It doesn't work that way, guys. You have to actually look at like the actual edges. Where does that edge come from? Like if there's a behavior in the market, why does that happen? Can you explain it with market microstructure? The things that I'm teaching you, we can explain with market microstructure. There are all these formulas and stuff and well-proven, peer-reviewed studies that explain why these behaviors happen in the market, and then we're just combining it all together to get a little bit out of the market. And we don't have to take on excessive risk to be able to make money. In fact, we can do the exact opposite. We can let the other guy take on the risk, And we can hit in when we know something is going to happen and make huge winners. So we don't have to take on risk. We just only trade when we know what's going to happen. It's the exact opposite, right? So you smell what I'm stepping in now? So yeah, that's what price action traders do. And if you go and you watch my latest video, I have a video where we go into price action and smart money concepts, basically. And I show you a strategy we programmed that's based on one of their best setups. And we show how it worked for a little while and then it stopped working. That strategy doesn't work in futures even if you can stay solvent because the CME has position limits. Oh, man. Yeah, there you go. Or are you talking about, Minek is talking about me, I think, which is, no, maybe he's talking about somebody else. But I think he's talking about me. So the least likely person to sell a course because he doesn't need to, and he makes money trading, and you can probably learn most things by sticking around. Most of his material and edges solely because of experience and screen time? Oh, I don't know if that's not. Oh, it was tech. Well, I wouldn't say that most of my edge is from the screen time. I think that most of my edge has come from working for a bank in technology, and a lot of studying little things here and learning about market microstructure, and then having the innovation necessary to understand how to apply those things to a retail trader. That's really where it comes from. And the experience and everything is kind of a prerequisite towards making that stuff work for you. This is the way that I would look at it. But you're right. I'm very unlikely to sell a course. I might write a book someday. I do feel like that there's too much information and that I really want it all written down. I wouldn't market it as a course. I would market it as a book, and maybe it would be an expense. Maybe it would be like a $90, $100 book, but I wouldn't market it as a course. I would only market something as a course if I was going to teach it. Like you were going to come in on the Zoom call every day, and I was going to teach you stuff, and I would be writing equations up on the board and teaching you this, market microstructure stuff, and you could ask questions, and then I would call it a course. But I'm very, very, very doubtful that will ever happen because I've got too much other stuff going on. The book maybe could happen many, many, many years from now. But right now, I'm just too busy. Like right now, I don't even have the time to make TikToks anymore. I'm so busy during the day most of the time that, yeah. So... just had a quick thought and realization. Gambling is addiction. Traders are often just gambling, but for the ones truly gambling, I wonder if addiction is part of the problem. Well, yeah. I mean, the thing is just taking the gamble, because like, what do you define as gambling is actually not as concrete of a thing as you might think, right? Because some people think that gambling is putting money at risk with the possibility of making money. Whereas other people think that gambling has to do with the skill involved. But then if it's with the skill involved, then does that mean that playing poker is not gambling? Right? So there's kind of like... yeah, you need to realize that gambling is a word. It's a word meant more to convey an opinion about something than it is a word to describe what something actually is or what they're actually doing, right? When we say somebody is gambling, what we really mean is that they are doing something risky that we don't approve of. That's what it really means, right? Because a lot of people will call trading gambling, even if you have a straight up edge, right? But to the comment, something that is really devious is that people will get addicted to random reward, right? If you get rewarded, you do something and then you get rewarded and then you don't get, and then the reward becomes inconsistent, you keep trying to do it. Like they do this thing with the monkeys, right? Where like every time the monkey pushes the button, they'll give them a reward, and then it changes. They don't get the reward every time that they push the button, and the monkey will just start pushing the button more furiously. Yes, that absolutely falls into it. And there are a lot of people that are just straight up addicted to it. Another thing that will happen that people don't realize is that anxiety can be addicting, believe it or not. I would always laugh on, like, straight up. I'm going to say something very controversial here, okay? But it's the truth, okay? People can become addicted to negative things, and people can become addicted to anxiety. Yes. So a lot of people will chase after bad partners that are not very available, and play games with them and kind of always leave them hanging. And they'll go after partner like that. Why is it? It's because they get addicted to the anxiety. You get that butterflies in your stomach and you're sitting there thinking about it the whole time, and it's addicting. They confuse it with love, right? There are people that you get depression and you cry a lot. Well, crying releases dopamine. So now you start to get into this cycle where you're depressed, so you cry to kind of boost the chemicals in your brain, but then that just makes you more depressed, and so you cry more, and it just keeps you in this cycle. And yes, there are people in many different kinds of some mental conditions, but there's other things that I don't know. There's arguments about whether they're mental conditions, but like people will say, why would anybody choose to be transgender or gay? Because it's a negative thing. Well, your brain can attach onto chemicals on things that aren't necessarily positive and drive you towards destructive behaviors. Absolutely, they can. Yes. And that is what is happening to a lot of people, and I've seen it. So it's my son, some of his friends, his friends were all like that. And that's what some of them were doing, yeah. So as a trader, it's absolutely something that you have to watch out for. And the way that I've solved that problem is this. I don't take a trade unless I know what's going to happen. I avoid as much as I can taking trades on just a prayer, right? I need to have a very clear idea of what is going to happen, what the flows are going to be, and already see some things confirming my theories before I take a trade. And that helps me avoid getting in the situation where I want to take trade after trade, because being in the trade gives me dopamine and is addicting. Might be time for me to switch my contacts. This contact was not rotating correctly. My ADHD ass is getting triggered, and now I need to be. Yeah, that I totally see that. This is why also a lot of traders become addicted to smoking, because trading is stressful and the smoking relieves the stress, and then you get into this point where you are stressed out unless you've just had a smoke. Yeah. Sometimes Seth rants can be like as if something Stephen King wrote. Well, what happens is that my brain likes to make connections more than the average person's brain is. So when I start talking about something, I will go into 3 or 4 different examples of that dynamic or that thing at work in society or in the world, so that you can kind of understand a little bit better about how that works and what's actually going on. So the point of bringing up the transgender thing wasn't to disparage people that struggle with that, but merely to point out that you can very easily become addicted to destructive behaviors. I love your answers. Now, on the ADHD thing, if you have ADHD, you will trade better on medication. Absolutely. Because one of the biggest problems that you have with ADHD is impulse control. And impulse control is a huge part of trading. So when you have the medication, now you can control yourself better. And people will say to me, like, I don't get this as much, but a lot of people will say, you stay very, very calm when you're in a trade, even if it's going against you. You aren't very impulsive. Like, it's very rare that you come in and you just are trading just because you're bored or whatever. Well, that's not me. It's a medication. 100% it's a medication. On the Huberman podcast about breathing? Oh, yes. So I give you 2. I think the one that you're probably talking about is that if you breathe in, and then after you've breathed in, you take a short other extra little breath to really expand your lungs. That tends to calm us, especially when you're under stress. Another thing that you can do is try to, I'm looking here at the DOM here on this screen right here, this general area right here. But then I start to consciously think about my peripheral vision and trying to see as much as possible, going further and further out. Like my hands are out here and I'm going further and further out, right? And that also tends to calm and focus you. I think all of us here would score high on, I think that the stream would score higher on autism and ADHD, both because there tends to be more autism and ADHD in the trading community, and because people with autism or ADHD are more likely to be attracted to the stream. There's going to be a lot of neurotypical people that will not enjoy the stream. To enjoy this, like, honestly, the conclusion that I could be totally wrong about this. This is one of those places where I think that the reality is probably a little bit beyond my capacity to understand myself at the moment. But I think that to enjoy this stream, you're either autistic or very, very open is kind of the way that I think about it. Or you totally share my political beliefs, which is probably going to be very rare. To enjoy the stream, I think you need to love trading. There isn't much dopamine here. Well, it comes in short bursts, right? I think that's part. I think that there's something too that the viewers are, you guys, you're here every day and you hear from most of the stream. Because somebody that comes in and just watches for 5 minutes, they're probably going to be like, oh, this is boring. They're not going to get very much from it, right? Yeah, or maybe all of them, says Andre. Totally. Studies have shown that longer breaths in will increase heart rate, but longer breaths out will lower heart rate. So it comes into this other interesting thing. Like, I think the personality for trading that's interesting is that it tends to come into this locus of high openness, high disagreeableness, and high conscientiousness. So you get people that are very disciplined, very aware, want to be on time, very aware of other people all the time, but are also very open to new ideas and don't just accept things that are given to them. That's what you need to have to be a good trader. But that disagreeableness in particular is very strong in our community. The people most likely to become traders are men that are very low in the agreeableness attribute. I still don't believe this whole thing with Akshay is low IQ. Jiwei scored very high on agreeableness. I mean, it's not like we don't have agreeable people in the community, but we've done this study thing, and we're very low in agreeableness. We're very disagreeable. But that's the thing, is that well, I suppose maybe it could work if you were highly agreeable, because the whole thing is like, if you come into this stream and you hear something that you don't like, why do you stick around? Because the average person will not. The average person doesn't like sticking around when they're hearing stuff that they don't like constantly. But the kind of person that will be successful in trading is the kind of person that loves that. And this comes back into that whole social media thing they were talking about the other day, right? That proximity only breeds contempt, usually. Most people, when they see people that disagree with them or are not like them, the more contact that they have with those people, usually the more that they hate them. And probably part of why there's so much toxicity on social media is because it's bringing people with very, very different viewpoints in close proximity to each other. And so it just creates more conflict. And it's the kind of people that are very open and enjoy conversing with and seeing a lot of interactions with people that don't agree with them are actually quite rare in the population. And that tends to be most of us. That's why you're here, right? Because I kind of intentionally will come in and go, okay, what is the thing that would be like most upsetting to people? Not that I'm going to go and overstep the bounds and say something that's completely inappropriate, but, something that people will disagree with, yes. Because I'm intentionally trying to filter out those kinds of people because I know that they're not going to be very beneficial to us. Those kinds of people that they are extremely agreeable but very not open do not make good traders. Where are we going? No, actually insists that he took an IQ test and he scored very poorly on it. And he was saying that he was like 80 IQ or something like that. But my understanding of like what an 80 IQ is, it would not be, this is not actually, something's wrong. His test got switched with somebody else. He just did really poorly. He got like a bubble off on the bubble sheet or something. Like there's got to be some explanation for that. So my understanding is that people with an 80 IQ can't even understand hypotheticals. Like if you ask them, if you didn't eat breakfast this morning, how would you feel right now? If I didn't eat breakfast this morning, I would probably be okay, but I'd be hungry. I'd be hungry, but I'd probably be okay. I wouldn't be like starving. I'd be ready to get this stream over with and go and eat something, right? Okay, but if you ask that to somebody that's low IQ, they'll say, but I did eat breakfast today. They can't even get over the idea that it's a hypothetical because they can't even conceptualize it in their mind. I don't know about this. We have moved down a little bit, but I was thinking, where the place that I could have taken a trade at would have been 417, and I said I didn't have a trade. Okay, we have moved. You would have only made 6 ticks off of it. Yeah, he's told me this story before. I still don't believe him. Yeah, I'm sorry. I'm like saying too much stuff. But what was this thing? In schools, they teach us for 22 years that you need to give the correct answers to questions, but in the real world, they never seem to realize that the correct answer may not even exist. And then people feel lost and defeated because they weren't trained to seek and find, but rather to be right. Well, yes and no. Okay, so there's this thing that's like, there's a problem with our education system. There definitely is, which is to say that our education system was very, very much geared towards helping prepare people for an industrialized age. And now that we are in an information age, we need different things. And the schools don't seem to have figured that out yet, how they need to adjust. They think that they'll continue to do the things that they were doing and just, try to be a little bit more open and ask people more challenging questions and things like that. Whereas I think, or at least some people think, in the education industry, that you need to like completely restructure the classroom in some ways, right? But I think that the problem is actually probably more fundamental than that. I think that the average person is just not a problem solver like that. Like an engineer. I think that an engineer is a specific type of person that has evolved throughout the decades, or over the millennia, I guess you could say, and that's not most people. And what we're asking now is for everybody to become an engineer, and it's just not going to happen. It's just like this thing with like computer science. They say, 50 years from now, computer science probably won't pay very well because artificial intelligence will do one part of it, and then the other part of it, there will be so many people that are able to do it. But what we're finding, or that's what they said 10, 20 years ago, but then they found out that they just can't get enough people to go into it because a lot of people will try and wash out. So they can't do it. I'm taking another test because what the dean told me was super funny, and when some dude wants to rub his 120 IQ in his face, I ask them how much they make and rub it in there. Dude, okay. So this reminds me of something have you guys watched on Netflix? Oh my gosh. One of the things that I hate, this is going to be such a funny thing to say. One of the things that I hate about getting older is how many things I notice that I hate. It's just a part of becoming a grumpy old man. I don't know. But it's like, I hate all of the content that Disney has been putting out lately. I hate what they put out on Netflix. There's so many things about the content that Netflix makes that I just absolutely despise the way that it's going. HBO used to be great, but then they turned it into HBO Max or whatever, and they completely destroyed that service too. I'm really annoyed by the kind of content that YouTube shows me. I'm really frustrated by TikTok lately. It feels to me like all kind of entertainment content that I've been consuming in the last 6 months has just sucked. Okay, but there's this show that I've been watching. I have found it entertaining, but I don't like it. And it is the Squid game show. So you've all seen Squid. I'm sure you've all watched Squid Game because that actually was an amazing piece of work, even though it has some ideas in it that I disagree with. But so Mr. Beast, he did a YouTube thing. I've never watched that. I should go watch that. But they've made a whole Netflix show, like 10 episodes or something like that. And it's kind of interesting the way that they play it. Like, it's definitely it's definitely a Netflix show, okay? And you can tell by the types of people that they choose to be in there and stuff. But something that diverges in the show that you don't see as much in Squid Game that really bothers me is that in the game show, anybody that does anything to draw attention to themselves almost immediately gets axed. So like they'll have a thing, there's a phone, and you can choose to go and answer the phone call. And if you answer the phone call, then you're given a challenge, right? Well, the challenge is you have to convince somebody else to pick up the phone or you're eliminated. Okay, so then you get eliminated. So it's like never volunteer for anything because that increases your chances of getting eliminated, right? And then they'll have another one that's like, okay, now everybody has to vote for one person to eliminate, and the 3 people with the most votes will get eliminated. Okay, so anybody that's been doing anything recently, whether it was good or bad or whatever, because they're in people's minds, they're the most likely to get voted on. And that's pretty messed up. I really don't like that because that wasn't really a part of the original Squid Game. But the thing that was a part of the original Squid Game was very much like that. Yeah, there is skill to it. Like the way that you got there was skill, but there's a lot of randomness involved too. And people have this tendency to think that when they're successful, that it was all because of skill. And when they lose, it was all because of luck. And you definitely see that in this Squid Game. And so the one example, and this is where it comes back into the IQ thing, is there's this girl and she's a game developer of some sort. So she's like the prototypical gamer girl. Like she's got dyed red hair and all of this sort of stuff. And she's sitting there bragging about her IQ and it, like she's clearly autistic. Okay. Because nobody talks about their IQ like that. She's like, yeah, my parents had me tested when I was 10. And I've been in Mensa in the UK since I was 10. And I'm really good at all games. And so I'm just going to go. And so then they go in and the game is Battleship. And she tells them where to put the ships and everything. And then she's the captain that decides where to shoot. And she doesn't miss even once. Every single shot that she takes hits, and they take out 2 ships, and then they win the game. And then she's like, "Yep, see, it's because I'm so smart. I'm so good at gaming and all this stuff." And I'm like, "It's fucking random. It's random." Like the whole thing is designed like the numbers of shots on the ships and the number of ships that it takes to eliminate a team and all of that, and the size of the grid is all designed so that you get a close game every time, guys. It's random which team wins. You got lucky. You were lucky. And you attribute it all to your skill. So grating. I really hate it when I come in, when it's like, I enjoy a show, but I don't, you know? Kind of hate it, but I still enjoy watching it. Ugh. According to Social Blade, you make between 6 and 97. That's low. Off of the YouTube ads itself, that's about half. I'm not even kidding. I don't think I don't think I'll get in trouble, so I'll tell you, but I don't think that YouTube likes it when you tell people how much you make from ads and stuff like that. I think because it kind of screws up the what people pay for ads and stuff like that. Okay, but most months we make around 200. And when things were going good, like in the 2021, it was more like 300 and 350. Yeah. Isn't that crazy? Yeah, there you go. Is it true that if you make more than 150 a month on YouTube, you are in the I don't know about that, maybe. I tell you what, the thing that's wild is I always look at, like, there's these other channels, like even just other trading channels. And I look at it and it's like, these people that have upwards of 100,000 plus viewers. If I had 100,000 plus viewers, I wouldn't need to have a day job anymore. probably would make enough money to live just from the YouTube ads. It's crazy. Yeah, but there's a lot of YouTube channels that like don't make anything, right? So I don't know where that actually qualifies me. But the thing is if you're doing anything related to finance, the CPM is insane compared to anything else, man. You guys are valuable. You're really valuable, right? Because if I come in and I say like, hey, this broker is really good, or whatever, you know, you could potentially be spending, you know, that could possibly be $1,000 of revenue for each person that comes through, right? And if there's just even 30 people watching, even just 30 people, that's potentially $30,000 worth of revenue for a company. It was very valuable. Yes, so you get paid a lot for the YouTube, and the Social Blade scores for our kind of a channel tend to be low. Why do you even bring that up? Are you appealing to my sense of narcissism to get me to brag about myself? I don't have any qualms with you knowing that we make a certain amount from the advertising, because I do everything that I can to try and invest that back into the channel and make it for your benefit. Now, some of that does end up being like we bought the new computer, for instance, okay? And you might be like, well, you didn't really need the computer. Is that actually going to help the channel? Well, I'm going to make content with it. We're going to be programming some stuff, so there should be some benefit for you, the viewer. Like, there should be edge that you should be able to get from that in the end, right? I try to invest all of it back into the channel. No, we still got 30 minutes left. It's only 8:30. I've been talking for a long time, though, haven't I? You could be leveraging that 11K member Discord you got there to direct it to your channel. Well, the number of people that we have on Discord and the number of subscribers on YouTube are pretty close. It's like, what, $11,000? You invest that money back into your channel for our benefit. Have you ever considered buying wig? I have, actually. You're not the first person to bring that up. I actually, like, here's the thing. I you know, this is just me being weird, but I like being bald. I really do. Mostly because it's easy. Like that's really all it comes down to. I don't have to spend time doing my hair. I don't have to find time every month or whatever to go and get a haircut and, you know, worry about, am I getting the best, you know, could I actually do something different to do my hair differently, etc., right? Yeah, so I like being bald. But another thing that I enjoy is just like, okay, like, if you do your style a little bit differently, what would that actually look like, sort of thing. So, like, to be able to try on different hair, I think that would be cool. I think it would be interesting to see what would look best on me. Just, you can do anything with your hair. It doesn't even have to be your own hair. I think that would be interesting. I don't think that I would ever do it because I know that people would interpret it as, well, you're self-conscious about being bald. So I want to show what my true self is, just front and center, like that. But, you know, if I was like, if something weird, things went in a weird direction and somehow I was hired by CNBC, for instance, and CNBC says, we think that you should wear a wig. Okay, that's what you want. We can wear a different wig every day and it can be a running joke. I think that'd be hilarious. Right? How about we all move? Yes, I've got a solid 500K to 1 million. Let's all buy 40 lots and yes. Well, with the way that the ES has been trading the first hour, you may actually be able to this might actually be one of the best times if you were ever to try and create a move from retail. Oh yeah. I think that you would need more than our stream. But I think that if all of us came in and bought and we all had like multiple contracts in ES, could probably be enough to break the high at least. It's actually like, yeah, because the market is really tight right now. It wouldn't last for very long, but started the short squeeze. Yeah, you just gotta hit those offers, right? There you go. There's 314. Now we need somebody to take out that 46.54. Yeah, oh yeah, I would definitely do it with something thinner. I think the problem is if we came in and intentionally said like, yeah, we're all gonna buy at a certain time and we're gonna move the S&P 500. Pretty sure that they consider that kind of orchestration is illegal, so we can't actually do that. Otherwise, I would say like, okay, guys, save up. Because on this day, we're going to move the market and do it just to prove to everybody that it actually works that way. And we would go through and be like, we know how many contracts we have relative to the amount of volume that we think is going to trade in the next 30 minutes and try to predict how far it will move the market for us and everything. Hey, Mr. FBI or SEC, man, I am not participating in this thing. I am just eating my cake and laughing, whoever is listening. There you go. You classify as a professional? Okay. Oh, you think you could do it all by yourself? Maybe. I gotta tell you, man, especially in a situation like this where like the market makers are in control and there's not a lot of activity, one lot can completely change things. It might not be like moving the market, but I do think that if you were to have a time machine and you went into one time where you submitted your lot and the other timeline where you didn't submit your lot, that you would see a difference. Butterfly effect might, yep, exactly. I'm so, man, actually, you've been all over because you asked me about wearing a wig. You asked me how much we make on the YouTube channel. Oh, yeah. So going back to that, yeah, I don't think that I would buy a wig. That's what it was I wanted to address. Somebody else said, why don't you buy a, oh my gosh, why don't you pay a good looking woman to come in and sit on the stream too? If I was making enough to actually pay somebody minimum wage, I would totally do that, actually. I mean, I would hire the best candidate regardless of their gender, ethnicity, or whatever, but I would absolutely hire somebody to be like a stream assistant risk manager. I think that would benefit the stream a lot. Probably, I would want a video editor first, but I've kind of been thinking, so this was something the other day, like, who was his name? Oh, Trades by Matt. He has like a video editor now, right? And when he got the video editor, it completely changed his content. Now it's like the summary videos are what goes up, and I don't think that the lives stay listed. So, like, if you don't save the URL for the live, it's not there anymore. That was what it was last time I looked. I might have changed. But, you know, and I was kind of watching the videos that they made, and I was kind of like, you know what? I don't know if a video editor for my channel would actually be as great of an investment as I always thought it would. because I wasn't that impressed with it from when Matt was doing it. And it's nothing against Matt. It's just me kind of realizing that the content that comes from it is maybe not as worthwhile as I thought it would be. Drop the right-wing propaganda and go Gucci. How will you be a millionaire if Trump wins? I really, usually going into an election, I have a pretty clear idea of what I think is going to happen, and you know, I play through it. But this election, it seems like such a wild card. Like the thing that I keep thinking about is there was this poll that showed that, like, if Donald Trump was convicted of a felony, that like 30% of Republican voters would then decline to vote for him. So it was basically saying, if Trump wins the nomination but gets prosecuted for a felony and is found guilty, that he will lose the election, according to that poll. And what are the chances that he does actually get convicted? What are the chances that he gets convicted before the election? And then there would be like appeals and all this other stuff. Like, I can't even fathom. Oh, okay, yeah, sorry, Billy Ray, you asked a question earlier. Thank you for asking again. Is there any advantage to renting a co-located server to get in the queue faster? There absolutely is. So, getting co-location probably isn't going to let you beat, the banks, for instance, or the HFT firms that specialize in this. But it's definitely going to give you a leg up over the average retail trader and make certain strategies feasible that weren't feasible before. So I don't think that you could just go with the standard arbitrage trade and make money just because you're co-located. But, if you've done some work, you found some sort of a unique edge based on the market microstructure, and then you go and co-locate, yeah, you could totally work it out. My hope is I'll do all this machine learning and learn some stuff on these machines, and then at some point in the future, I would go and get a co-located machine. They ain't getting Trump. Biden can't even speak a line. I really want that debate to happen. Trump will demolish him, but I'm pretty sure they won't agree to the debate no matter what happens. I don't know, like, so have you seen this whole thing where, like, they're saying that Trump is making certain gaffes and stuff too, and so they're starting to question Donald Trump's mental fitness. This is very much a transparent strategy by the Democrats to push against the public's widespread perception that Joe Biden is just not all there. I don't think that this strategy will actually work, because even though it probably is the case that Trump is starting to go a little bit, he's still awfully sharp. And whereas Joe Biden was always questionable anyways, and now that he's in his old age, it's really like, what the heck is going on, guys? But will there be a debate? That's another really interesting question. I'm pretty sure that they can just pump Joe Biden full of drugs like they did last time. I tell you, the Joe Biden that we saw in the debates is not the Joe Biden that you see day to day on the trail. So, wouldn't surprise me one bit. I also think Donald Trump probably does. I bet you. On this one, I'd almost be willing to bet money that Donald Trump is ADHD and has like an Adderall prescription and has used it in debates in the past. Like, he feels confident debating without it, but that it helps him. So I think that they could do the debate, but I also think that Team Biden would probably want to avoid a debate if they can, just like last time. I mean, the debate that they had wasn't that bad, though. So, like, I don't know if that's going to be the determining factor. Well, Biden can't move ES like 2% overnight, how Trump could, so Trump auto gets my vote if I was an American. It's true. I mean, I have to admit, trading was a lot more interesting when Donald Trump was president, for sure. Because at any moment you knew that something could come over that Twitter that would just completely flip the market on its head. And it was entertaining to watch. I enjoyed every second of it. There's definitely nostalgia for it. I don't have any regret. I feel like I took full advantage of that, and I can just always remember it for the great times that it was. Oh, man. So then there's this other thing that's like, what if something happens and then Donald Trump can't actually run? And then, like, what, you go with Ron DeSantis at that point? And I gotta say, this one will sound crazy, but I think that is still a chance that the Republican field consolidates, and that it could consolidate. Like, basically what happens, here's what happens is you have New Hampshire and Iowa, right? And then at that point, Nikki Haley decides she can't win. And then it's just between Trump and DeSantis. And when it's one-on-one, maybe a closer contest than we realize. We'll see. Don't say things like this, Seth. It breaks my heart and makes me sad Trump will be there. Could be. To be honest with you, I don't have a whole lot of hope for solving the country's problems, regardless of who ends up running. I think that the two parties have chosen strategies that are just not going to solve anything. You can just see it with the Democrat Party, where it's like, okay, we think that housing is a problem, so they propose a bill to prevent hedge funds from being able to buy houses, right? Well, first of all, they know it's not going to pass. Almost guarantee you that it'll be like all the Republicans and then just enough Democrats to vote on it to prevent it from happening. But then, even if they did do it, it's the wrong strategy, right? It wouldn't fix the housing problem. What you need to do is you need to say, why aren't builders building more homes? What is preventing builders from building more homes? Well, they can't get access to the capital, and the cost of building is too high because of regulations and so forth. You don't see anybody in the Democrat Party talking about that, do you? It's because they're straight up, their whole strategy is just like, doesn't work. It's the same with the Republicans. Whoever gets put in office with the Republican, their big push is going to be, we need less taxes. And you know what? Less taxes would be a good thing, but that's not actually going to be the thing that moves the needles, right? The problem that we have on that end right now is that it's too hard to start a business. What we should be doing is we should be making new laws that democratize the economy better. We have the greatest wealth generator in human history in the capital markets that we have in the United States, and we've put it behind this paywall so that only millionaires can take advantage of it. And we need to give more regular people access to that, so that if you have an idea and it's a good idea, you can go and you can put it online and you can get funding for that idea. Beyond just like the GoFundMe sort of Kickstarter sort of a thing, where you could like actually sell people equity in your company with the correct disclosures and so forth. And there are companies that are trying to do that, but it's just because of the way that things are set up right now, it just doesn't quite work, right? And then on top of that, don't charge middle-class Americans a capital gains tax. Allow them to invest in anything that they want and reap the full benefits of it without having to put it in some 401k where you don't touch it until you're 65. Let them use it now. Let everybody take advantage of the life-changing effects that access to, capital gains can bring you. That's what Republicans should be pushing, in my opinion. It's not going to happen. It's not gonna happen. All they can see is taxes, taxes, taxes. So you're going to get Trump and you're going to get Biden, and I don't know how it turns out, but probably we have to wait another 4 years to really see anything change. Because whoever wins, it's probably just going to be another 4 years of not on either side being able to accomplish anything. More money into people's pockets means more money to put into the economy. Well, yes and no. So kind of the issue is that you can say, okay, if we reduce taxes on the wealthy, that is more money that probably goes into capital markets, but that will just go into certain sectors of the economy that are like doing well at that time, and it doesn't actually filter out to the rest of the economy. So you kind of have to take a step back and actually look at the economy as a whole and say, where are the problem areas? Where is the money not getting to that we need to get it to? Like housing is a great example. There's money out there to build houses. Why isn't it going to building houses? So we need to find what those kind of roadblocks are so that we can remove them and let the capital flow more freely in the direction that we need it to go. I was hoping DeSantis is the guy that will bring the need change. Now I'm not so sure after his comments. Also, are you a hawk too? I mean, that whole thing to me is just the most interesting story of the campaign season so far. I know that that's probably not the thing that most people focus on, but to me, I think that Ron DeSantis would have picked up a lot more support if he had just chosen to be hawkish on Ukraine. You don't have to be a war hawk like Nikki Haley. Frankly, I think that Nikki Haley's attitude in the debates is a little crazy, and she makes me very uncomfortable. Like the first debate, I was like, hey, maybe Haley could win, and then she started getting like really hawkish, and it makes me so uncomfortable, man. Because like Nikki Haley, when I hear Nikki Haley talk, it sounds to me like she just wants to go and start a war everywhere that she possibly can so that she can make more money. It seems that's the case. Is everyone here from Canada? No, I don't think so. There's a lot of people from Europe on my stream, though, because most Americans don't wake up that early. Over here in Canada, it's this disgusting large building permit fees for residential housing. The fees and wait time to get approved to build a house is what you can. Yep, 100%. Let's not say that, like, let's not make any kind of assertion about the degree to which it is causing a problem. But it is probably one of, if not the biggest roadblock to preventing more housing from being built there, yes. And I think you will see pretty consistently, if you look in the United States and across different cities, that the cities with the most stringent regulations and the longest wait times for permits are the places where housing is in most shortage. It's kind of funny. I don't think people realize how big of a divergence there is in the economy with the United States, because there are people in red states and they're just making the median wage. I saw a guy on TikTok the other day. He gets median wage. He's a blue collar worker. He has 2 kids and a house, and he made that all himself. It's because he lives in a small town where the price of everything hasn't become ridiculous. Versus you get these people in New York and they're making like $200,000 a year and can barely afford to live. I can't afford to have kids. I need to make $500,000 a year first. literally people out there saying this stuff because of where they live. Oh, you know what? This trend up here is getting a little bit of legs to it, isn't it? It's not above that initial kind of like pullback high. One more tick and then we're there in the 10-year. A decent amount of volume coming behind it. Maybe 62 to 52. 10,000 contracts long. Japanese yen seeing a little bit of a bid as well. Does that correlate with a drop in the dollar? Not quite. The dollar kind of fell before that. Don't know. Kind of seems to me like there could be something happening, but not enough that I would want to jump on board it with it continuing. If anything, I think I'd probably fade it. 100K a year in today's economy is not impressive as impressive as it used to be. 100K is the new 50K. Could be. If you live in a city, then it certainly is. You live in a city. You live in Vancouver or what's the other big tip? Ontario. Yeah, you've got to be making six figures to really afford very much in those cities. Save Canada. Well, I don't think we have to do anything. I think that Justin Trudeau is screwed up so badly over there that the Conservatives taking over is pretty much inevitable at this point. Poilievre, is that how you say his name? Is almost certainly going to be the next Prime Minister of Canada. I mean, I don't know that much about Canadian politics, but I've been kind of following subreddits on this and following the sentiment and the polling on it, and it's really looking like it's pretty much inevitable that Trudeau is on his way out. Pierre Poilievre? Poilievre? So it's a French name, so it's kind of funny. Oops, that I did not intend to do. Good thing I didn't have the account armed. Watch them like push to new highs now and leave me behind and not fill it. I'm trying to my best to brainwash anyone into voting for him. That's funny, dude. Oh, come on. That would have been a fill. Don't even be like that, Sim. I tell you what. So here's the biggest political question out there in my mind right now. It seems to me that the COVID crisis really shifted a lot of people's opinions on government. I think that the people that, that shifted to be more anti-government, or people that were already kind of anti-government before, but it was like they were conservatives before, and now they're like right-wing, just get the government out of my life, libertarian crazies almost now, right? Like I see a lot of that now. It's just the distrust for government is unreal in some parts of the internet now. Like when it comes to these economic numbers, like all the economic numbers look kind of good. I think that there's reasons why like the consumer sentiment isn't very good right now. Okay. And it has to do with the specific numbers. We want to say the economy is good or the economy is bad. People are positive or negative on the economy. And the reality is a lot more nuanced than that, especially right now, because there's so much nuance in the numbers themselves as well. Okay. But I also think that there could be some sentiment in there because people distrust the government so much now. And so the question is, how much of that is, how much has that actually moved the needle? Has this really caused Americans as a whole to trust government significantly less than they did? Has it really actually moved the needle, or is it just kind of a conservative thing? Because in Canada, the things that Trudeau did, where he was basically shutting down the bank accounts of political opponents, and here in the United States, you got a lot of evidence of Joe Biden basically using Twitter to silence people. But it's been so much worse in Canada, and it seems like everybody in Canada sees it and is very pissed off about what has happened. And they might not be talking about it a ton and openly, but it certainly seems like in the polling that sentiment is there. I haven't seen any polling to that effect here in the United States to see if that same sort of thing is going on. One thing that I do see here in the United States is trust in elections is definitely harmed. I tell you what, this attitude that's like, no, there's no way that anybody could steal an election. There's no evidence that you could ever steal an election, and we're not going to make any changes to try and make elections more secure. That was like the worst strategy you could possibly implement to try and increase people's confidence in elections. You want to increase people's confidence in elections, then when somebody points out a potential security flaw in our election process, you fix it. Oh yeah, and by the way, making it so that you don't actually know what the count is and who won until like a week after the fact, that is also not going to increase people's confidence, okay? Because we've been our whole life knowing who won at the end of the day. What did you change that made it so that it takes days now? It's not okay. That has definitely happened in the United States. And Republicans definitely don't trust it, but like independents are moving towards not trusting it too, and it's only Democrats now that are like that. Go figure. Let's see here. I was over in Ottawa when they cracked down on us and brought in the emergencies ask for the peaceful protest. Yeah. It really was a wild situation though, right? Like if that protest had been allowed to continue, it would have done measurable harm to the Canadian economy. But can you justify breaking people's civil rights to break up a protest that could harm the economy? No, you can't. That's not legal. That shouldn't be legal. And Trudeau did it and got away with it. And yeah, I think everybody realizes what happened there, and they're not going to let it happen again. Another way of looking at it is this. When you're in school and you learn about what happened in the past, that the American colonies started a revolution against the British because of all of these different grievances, and they didn't have freedom of speech, and they didn't have, was taxation without representation. And we all say, oh, isn't it so great that we became a new nation and we have more freedoms than ever before? And that's true. We are more free and more prosperous than at almost any other point in human history. But at the same time, I also see how a lot has not changed. That the sorts of injustices that were done to people 400 years ago, that there are still people in power that try to do those things today. And they're just really good at hiding it from us. But if you're really paying attention, you can see it. And it's kind of sick. It kind of almost makes you sick, right? Like, yeah, they actually, the government does censor people. They did. It's just the way that they did it was by telling Twitter, hey, Twitter, are you going to let this person be on your platform? And then they had somebody over at Twitter that would always just do whatever they told them to do. We didn't have freedom of speech. The wildest one was that conspiracy theory guy, man. Like, I understand the whole thing about the conspiracy theory that about Sandy Hook was not okay and everything, but I still think that he has freedom of speech, right? And if he says something that is, you can't yell fire in a loaded theater or whatever the deal is, right? So if he does something like that, he should be prosecuted for it and whatnot, but I don't think that you just ban him. No. Not on Twitter. Yep, that's why they hate. It's totally right. You remember when this all started, that Elon Musk that said that, like, now that I'm going to, do free speech and everything, you're going to see the Democrat machine come for me. And boy, did it ever come for him. 100%. It's kind of funny because I've always been kind of, I don't really care when it comes to Elon Musk and Tesla and everything. I'm like, oh, there's all these people that really, really like him, but I just don't care. And I think the first kind of hint that I ever saw of people online being like, I don't like Elon Musk, was when there was that whole spat between him and that special forces guy about going into the cave and saving the kids or something like that, right? That whole drama. And I was just like, I don't care. I mean, he's a rich guy, whatever. Okay. But this more recent stuff where it's like, well, yeah, they are, trying to bully me into deplatforming certain people. And we're not going to do that because we're going to be a free speech platform. I'm 100% with him. It is a guy that I think he doesn't, he makes mistakes and he's a very weird guy and very imperfect. But he really is trying to make a difference in the world, and he is doing the right thing with Twitter. 100% doing the right thing with Twitter. And, I was already subscribed so that I could get TweetDeck, but I hope that they're successful. I really do, because I think it would be a very, very bad thing if Twitter went under because they were boycotted by advertisers. It's actually funny that they tried to blackmail him with money. Well, I don't know if it's funny. I mean, the whole thing is that if he wants Twitter to make money, he kind of does have to go along with it, at least in the short term. I don't know. Is 5 years from now this situation change? I don't know. And this is the other thing is that, like, it took too long, right? Because Donald Trump is on Truth Social now, right? Imagine if Truth Social had never been a thing. I think that you would have Donald Trump on Twitter again, saying crazy things, and that would be a draw to Twitter. But it's not. So, who knows? I think they did finally merge, didn't they? I haven't looked at that in a while. Before we go, it's time for me to go. But before we go, let's go check out the whack. Because I think they did have a little spike because they were finally going to do the actual merger, but I don't think that it actually, I don't think that it's actually was good. Digital World Acquisition Corporation. Oh, I need to go further out than that, I think. Okay, so there was a spike in the end of November when that happened. Yes. Not nearly enough to wash out some of the other spikes that we had. I suppose maybe you could buy it, but I don't really feel that the company's future prospects are actually that good. I've been very disappointed with how that turned out. So I'm really happy that I got out here. I made good money on that one. It took forever to merge. They did. But it was also the way that they've run the company and the service and everything is just not very impressive. Okay, guys, I will see you in a few hours for the FOMC release and press conference. In the meantime, stay excellent.